Earlier this month, we brought you The Outlook, presented by Regents Blue Shield of Idaho. We had 4 great in-depth conversations on issues facing our economy right now. Here's my conversation with Peter Oliver, principal at TOK Commercial Real Estate.
Happy to, Don. Always a big supporter of you, and thank you for all your great work you're doing for the community.
Appreciate it.
Yeah.
So, the theme today has been growth and change, and looking at how that growth and change is really affecting our valley, and you and the folks at TOK obviously really handle the commercial sector. And so I wanted to kind of just get a pulse on where things stand. We're 3 years past the impact of the COVID-19 pandemic, although still feeling some effects. And a lot of things have changed. So I wanted to kind of get your feeling on where the market stands right now.
Sure. I mean, in general, I would categorize our market as healthy, pretty much on all fronts. We're very fortunate, especially if you look around even across the country on similar size metros. We're in really good shape on all fronts, and I still stand by that today.
What sector do you think is seeing the most strength right now, and where do you see a lot of things really working and clicking?
Interestingly enough, I would say on the retail side, actually, if you recall, you've written a lot about this, but a mere 4 or 5 years ago, there was a lot of people that thought retail was dead or in jeopardy, whatever strength of word you want to use. And our market is strong. Our vacancies are low. You can take some recent phenomena with Shopko going out, for instance. All of their spaces have been backfilled. Some with new people, some with expanding tenants from the market. So I look at that as very positive. Most recently, we've got a couple of new holes to fill with Bed Bath & Beyond going through their situation. But even that, you look at it, a lot of those types of results were from, over leverage at a company level. The stores, locally might have been doing fine, but they're a victim of the corporate side of things. So, shop space is very healthy. You know how it is trying to get into a restaurant these days. You better call a week or two in advance if it's one of your favorite places. So to me, all those bode well. I talk to a lot of my friends that are in the retail world, and they're pleased.
We had kind of the late part of the last decade. As you kind of mentioned, we had a lot of especially the national chains go away. Shopko was a big one. Hastings, the Babies R Us and Toys R Us locations. We've had Bed Bath & Beyond go out. Is there any worry in that area that we might see another uptick again, or do you feel like Bed Bath is kind of an outlier? And on the flip side of that, are there still a big line of people looking to come into the market?
Yeah, I think there's really not a simple answer to a lot of these questions. Locally, again, activity has been healthy on the retail side. There's people looking. What we look at, and we dive into the data a lot here. I'm kind of an econ junkie at heart, but we've surpassed. We're at 850, 875 as far as our MSA goes. So we're quickly approaching that million population MSA mark, and that historically across the country has been kind of the next tipping point when it comes to retail. And we've seen that with Topgolf coming in. We've got Shields under construction now. And so my speculation is, there's going to be some casualties along the way. Some of it is definitely, tied in with Amazon. It's tied in with the internet. But those people that have adapted and have learned to use the internet as a tool, they've actually seen it as an improvement to their revenue. So when we look at, for instance, when we look at centers that we're selling, we look at the tenants, are they Amazon proof or not? I mean, that's kind of a new phenomenon with everything that's going on. But, locally and Treasure Valley wide, I'm optimistic on retail. D&B Supply, another great local success story. I don't know if you've been out to their new superstore yet at North Ranch.
I'm a nerd. I went and walked it. I was
there
scared.
You go. There you go. So A lot of good things going on, and I always have to preface things. I'm an optimist, but if you dig back and you look at what's happening here, it's pretty positive. But I look at our population growth, our income levels, everything is pointing to the right direction.
So if retail's kind of that strongest, where do you see some of the struggles? Is there a sector that's maybe having a little bit more chop in the water?
You know, there's choppy pieces of it. And so by that I mean, let's take the hot topic for right now, office, right?
Right.
We do have literally a handful of larger blocks of office that have hit the market since the beginning of the year. You've got, Citibank with their call center, DirecTV with their call center. The story of Tandem very well. You've got CenturyLink's space downtown, and while there's success behind it and growth, you've got Cradle Point, giving up some space at Boise Plaza. That being said, there's not a simple one answer to it either. Some of it is stay-at-home issues. Some of it is technology. With call centers now, they can track their productivity a lot better than they used to via software that's been enhanced, and all that's kind of a result of the pandemic. So you've got all these forces going on. So in those big chunks of space, that really doesn't represent the bulk of our market. I mean, our market is still the bulk of our tenants are between 1,500 feet and say 5,000. That market is still healthy. It's not as robust as it was. The velocity isn't as strong as it was, but I kind of have categorized this. We're in kind of a COVID correction. Correction might be a little bit strong of a word, but you could say a COVID normalization. People went out and hired tons of people, employees. We're seeing changes in that. That impacts office space, efficiencies. There was one school of thought, which was everyone's going to have more office space because they need more space. Then it was everyone's going to work at home. So
Radiuses, right?
It's really interesting to think through all of these things, but there is no steadfast one answer for it. But in general, that is the weak spot in the office market. We've got these big blocks of space, but I would still rather be in the Treasure Valley with those big blocks of space than other metro areas, for obvious reasons. And then go ahead.
No, you go ahead.
Oh, and then on the industrial side, we have a large amount of new inventory coming on in the next 12 months. That portion of the market, it's the challenge with it. It's a lot of space and it's a lot of the same space, meaning the size of the space. The bulk of our tenants in industrial are still between, say, 5 and 15,000 square feet. Our upper end has grown a fair amount because our market has grown, but a lot of these new projects, if they can get down to 20, 25,000 feet, that's kind of on the smaller end. So that one's going to be interesting to watch too. Good news is super high quality. We are seeing our tenant sizes grow. So that'll be one to watch on the industrial side. But below that, the market is as tight as I've ever seen it. So it's kind of parts of the different product types.
So it's a bit of a change, right? I mean, for a while, industrial just seemed like it was hair on fire in the market coming out of the pandemic. Now you're saying maybe a little slowing there.
Yeah, again, you have to peel back the data though. It's in that bigger size range. If you get down to, the largest segment of the industrial market as far as tenants go, still very, very active and very, very tight.
Amazon come in, build a couple million square feet out there, near the Idaho Center, and then announce some other thing. Well, I actually wouldn't say announce. They wouldn't confirm, but plan some things with their colors and their schemes, and they were clearly Amazon. And then it seems like they maybe pulled back some of that. Is that having a ripple effect? Is that playing out in other places, or is it really just mostly this mid-band kind of thing?
Yeah, it's an interesting question. Nationally, that's what's happening with Amazon, and they definitely got very, very aggressive. Locally, we are not seeing, a number of like support tenants that are being impacted by that. They built their fulfillment center. They have another center out by the airport. They had another one planned, which got shelved. on the west side of the airport, and then they built their van center. The van center is an interesting phenomena. I recently drove to San Diego to help move my son to Phoenix, and between here and San Diego, we drove by literally 5 of those, and they're just like the one here. They're brand new, state of the art Amazon van centers, completely vacant, and they're just sitting there. And as you get to bigger markets, outside of Vegas, outside of San Diego, they get bigger, even down in Salt Lake, than the one here, but they're just sitting there. So those things, nationally are going to have to get absorbed. But again, focusing back on the Treasure Valley, we're not seeing a lot of Amazon related folks that have been impacted by their, hitting the brakes.
So let's kind of swerve back to retail, or to the office segment for a second. Is there concern that a lot of people who had leases in place, you're hearing about this nationally, leases in place, they come up, they vacate them, you start to see rates plunge because there are fewer tenants and the quality goes down? And is there any indication that might be in the offing here, or is that still strong enough that that those types of things might absorb?
Yeah, again, another good question, and I like to use kind of general statements on where we are in each cycle. I think this is the 5th cycle in my career, and we are in the I don't know stage right now, and this applies to a myriad of topics that we'll touch on. So what we're seeing right now, the answer would be no. We are not seeing a softening of rates. We still have decent activity in the traditional size range that I mentioned. One of the things that I've been watching with the slowdown of the residential side, starting before you could say commercial started to cool off, we've had very few downsize or people vacating space tied in with the residential sector, meaning mortgage companies, title companies, on down the line. If you were around in 05, 6, and 7, it was an absolute Armageddon. It was terrible. So we're not seeing that. So that's staying very stable. We are seeing some firms grow. We're seeing companies move here that have been waiting to come into Boise for it to hit a certain size mark, which we now have hit. So I'm optimistic on the market within the certain parameters. We are going to have to deal with these bigger chunks of space, but again, I'd rather be in Boise, Idaho, or the Treasure Valley dealing with it than other metros, because I think we're going to see some companies continue to relocate.
Are we starting to see some spread? I mean, even downtown here where I'm at, and I know you're at a lot, it's not quite as vibrant as before the pandemic. It's picked up certainly, but it's just not, there's just clearly not as many people, especially once the legislative session leaves town. Do you think that some areas are going to see more strength, that maybe like the newer stuff at 10 Mile and Meridian might be stronger than downtown? Do you think it'll all equalize, or is there some differences in the different sectors of the geographical area?
Yeah, I mean, you hit the nail on the head. I mean, if you are a heavy parking user, it's going to be a challenge to be downtown. We have limited parking options. It costs money for parking spaces, so that's one of the many drivers. I think a lot of it is we're fast food, drive-through Americans. We like stuff to happen quick. It takes time to recover from what we went through with COVID, plain and simple. So if you talk to the companies, and it's the bigger companies, the publicly traded companies, they're having the harder time getting people back to the office for a myriad of reasons. But it is happening. It's just happening at a slower pace. I mean, you go drive. I just drove back from 10 Mile 15 minutes ago. That drive at this time of day is noticeably more busy now. To me, it's noticeably more busy. When you leave downtown between 4:30 and 5:30, it's getting back to where it was. But there are still several large companies downtown that are at 30 to 40%, or they're 3 days in the office. It's just going to take time for that to rebuild, in my opinion.
Downtown, it's all the construction. It just makes everything harder.
Oh yeah, I mean, over 10th and 11th on Grove Street. I mean, you might as well just walk everywhere.
I park right in the middle of that, so it's always
there you go.
Very fun at the end of the day.
Yeah.
What do you see? What role do you see interest rates playing? Continuing to be high? People are telling me maybe projects are going to have trouble getting financed at rates that make sense. Do you see some of that supply starting to taper over time?
Yeah, I mean, there's kind of two facets in general with interest rates. So on the construction side, absolutely, we're already seeing that. I mean, construction interest rates have almost doubled, and it was already challenging to do new projects because of costs, because of supply chain issues, all the stuff we've been hearing about for the last 3 years. Throw interest rates in the mix, and it's not doable. So yes, that's going to impact new projects. You talk to all the developers, you know them all, and they'll tell you the same thing. So that is going to, and that's what the Fed's trying to do, right? They're trying to slow things down. On the flip side of it, on the permanent side, it's impacting it as well. So if people are looking to go out and buy investment property and such, which impacts my daily world a lot, it doesn't make sense. We've got this lagging effect with sellers. A lot of sellers are still back in even the first quarter of 22 or 21, and they're still looking to get these cap rates. In round numbers, we've got about 100 basis point spread between bid and ask.
Interesting.
And it's even if you're an all cash buyer and you're a fairly savvy investor, you're not gonna overpay. You're going to use what interest rates are as your benchmark, and most people are not going to sign up for neutral or negative leverage. So yes, it's definitely having an impact. You can follow up with any of the developers, and I think the projects that are going now, they're all stuff that started 2 and 3 years ago.
Interesting. So maybe a little lag later in this decade, it sounds like.
Correct.
What are some of the other factors playing in here? We've got population growth and construction costs, and how do those play a role in the inventory and in all the different things we've been talking about here today?
They're all part of the equation, and you combine them all, and thus the challenge of being a developer and the development business. So with all those factors rolling into a project, risk is extremely high. And then you can sprinkle in some of these outliers, which we don't know yet with some of these bank issues that have come up. There are some banks that just are saying, we're tapping out for right now. Some of them have to tap out for right now. Right. So we've got all these continued added factors coming into the equation. So, I mean, what I think it's going to be those that are very well capitalized, that have very strong banking partners. They are going to do very select projects that make sense, but it's not going to be at the fevered pitch that we've seen. I'm not a contractor. I have lots of friends in that business. I don't see costs changing. What a lot of people don't realize is a lot of the build back projects are now all starting from I call it the hidden stimulus. Those are all starting now across the country. We have a lot of them in the state of Idaho. So any kind of slowdown that might have been happening in other facets of construction, meaning the private side, are now going to be, going into demand for the public side.
Interesting. What else should people watch out for? What's the thing to see? What's the thing to notice?
Well, we're seeing again, if you take in-migration, it has slowed, quite a bit now with post-COVID, et cetera, but people are still moving here. We're still getting companies that are very interested in our market, mainly because they're leaving other markets where business is not conducive or there's other challenges. So for us, I think it's very important for us to continue to focus on having safe communities, clean communities. I know everyone doesn't like talking about a quality of life, but that is a big part of it. And that covers so many different things. Our trails, it's just taking care of what we have. And then I see one of the positives of kind of a pause is to focus on things like infrastructure and give everybody a chance to catch up during this time. So those are the things that I'm watching, but I'm optimistic, and I see a good, steady long-term future for the Treasure Valley in our sector.
Sounds like optimism is the word for the day.
I'm optimistic. I think we have a lot of good things. I'd rather be here than a lot of other places. And so I'm excited about the future.
Peter Oliver with TOK, thanks for taking some time with us.
Absolutely. Thank you, Don, and thank you again for everything you do.
There's no place quite like Idaho. That's why Regions Blue Shield of Idaho is constantly reimagining the healthcare experience, tailoring it to fit the needs of local families and businesses. Rooted here since 1946, we're shaping the future with cutting-edge digital solutions, Idaho-based customer service, and unparalleled access to top doctors. That's the Regions difference you can count on. We get you because we are you.